Dirty dealings, corporate battles, consumer woes. This is Evening 5. A three-member Court of Appeal bench on Monday ruled to allow ex-PM Datuk Seri Najib Razak's appeal to have the merits of his challenge over the existence of an addendum purportedly issued by the 16th Yang di-Pertuan Agong for him to serve the remainder of his jail sentence under house arrest to be heard at the High Court. In a split decision, Judge Dato' Aziza Nawawi, who led the bench, was in the minority, while Judges Dato' Azhari Kamal Ramli and Dato' Sri Muhammad Firuz Jafril allowed Najib's appeal. Reading out the majority decision, Firuz said that in allowing Najib to adduce further evidence in the form of his son Datuk Nizar Najib's affidavit, the court also accepted that there was no rebuttal by the Attorney General over the existence of the addendum, and hence what was alleged and found by the High Court earlier of it being hearsay could no longer stand. In accepting Nizar's bid to adduce further evidence on behalf of his father, Firuz said the court accepted that the evidence adduced was not available beforehand, as Najib had previously written to 6 respondents from the government over the existence of the purported addendum, but did not get any response. Aziza dissented and said she agreed with High Court Judge Dato' Amarjit Singh Surjit Singh in upholding the decisions to not admit the evidence by Nizar, since similarly, evidence adduced at the High Court has been ruled as hearsay evidence. She ruled that Nizar's bid to adduce additional evidence did not pass the threshold met in Ladd versus Marshall, and she found no merit to accept them as further evidence. Although the matter is to be reverted to the High Court, it will be heard by a judge other than Amarjit. Case management for this has been set for January 13th. Cafe chain operator Oriental Kopi Holdings set its initial public offering price at 44 cents a piece in a share sale that would raise 183.96 million ahead of its listing on the ACE market. At the IPO price, Oriental Kopi is expected to have a market capitalization of 880 million ringgit upon listing. Applications will close on January 10th and listing has been scheduled for January 23rd. Established in December 2020, the company has rapidly expanded its footprint with 20 cafes across Malaysia and one in Singapore. Oriental Kopi also sells in-store packaged coffee and tea, as well as other foods such as spreads, pastries, instant noodles, and seasonal items such as mooncakes. Oriental Kopi has earmarked 75.78 million of the IPO proceeds for working capital and 53.68 million to set up a new head office, central kitchen, and warehouse. The company will also use 36.4 million for the expansion of cafes within Malaysia. The rest has been allocated to marketing activities in foreign countries, expansion of its brands of packaged food segment, and to defray listing expenses. Gateway Development Alliance, the consortium proposing to privatize Malaysia Airports Holdings, has extended the closing time and date for the acceptance of its takeover offer from 5 p.m. on January 8, 2025 to 5 p.m. on January 17, 2025. The consortium comprises of Khazanah Nasional, the Employees Provident Fund, New York-based Global Infrastructure Partners, and the Abu Dhabi Investment Authority. According to a filing on the board, GDA has already held a 70.1% stake in MAHB as at 5 p.m. on January 6. Based on the initial circular to shareholders, the takeover is conditional upon the joint offerers having received acceptances of not less than 90% of the company. M Investment Bank, on behalf of the offerers, said that the level of acceptances of the offer as at 5 p.m. on Wednesday, January 8, 2025 will be announced in due course. The offerers also reiterated its view that the offer is compelling as it presents holders the opportunity to realize their investment in MAHB for cash. Last month, all 5 MAHB independent directors said in a circular that there are no compelling reasons for shareholders to accept the offer, which they said does not reflect the airport operator's full potential, considering its positive financial momentum, growth strategy, and potential value accretion if it remains publicly traded. In contrast, independent advisor Hong Leong IB recommended shareholders to accept the offer, describing it as reasonable due to MAHB's prolonged suppressed share price, although the offer is below its independent fair valuation of between 12 ringgit 61 cent and 13 ringgit 71 cent per share. The offer price, a 5% premium over the last traded price of 10 ringgit and 48 cent on Monday, values MAHB at 18.4 billion ringgit. Shares of glove manufacturers rallied on Monday in active trade amid reports of new virus infections in China, though authorities have downplayed the infections as a seasonal winter peak. Topglove Corp, the country's largest glove maker by volume, climbed as much as 7.5%, while Hatalega Holdings rose more than 2%, and Kosan Rubber Industries was up about 3%. MIDF Amanah IB said that the seasonal influenza cases would not lead to a surge in glove demand inside and outside of China. It added that even if the outbreak becomes prevalent, Malaysian glove manufacturers may not benefit, as their Chinese rivals would have the capacity. In a note on Monday, the research house pointed out that the news on the potential outbreak of human metapneumovirus coincidentally took place with the commencement of a steep increase in tariff for China-made gloves to the US from 2025 onwards. The research house added the potential outbreak is still not a cause for concern and maintained a neutral stance on the glove sector. While China has reported experiencing a surge in infections of a respiratory virus, the Union Health Ministry mentioned that there is no substantial increase in the number of cases of viral respiratory illness in the country in December 2024. Oil and gas services firm Keyfield International is acquiring a 5-year-old platform supply vessel for $17.6 million or 79.2 million ringgit. It is funding the acquisition through proceeds from the company's Sukuk issuance, with an additional $2 million to be drawn from internal funds for capital expenditure to bring the vessel back to Malaysia and prepare it for operations. Keyfield's wholly owned Keyfield Offshore signed an agreement with Steno Commerce Harbour Engineering Co. to acquire the vessel, which will be renamed Keyfield Gratitude, according to a filing with Bursa Malaysia on Monday. The company said that the Keyfield Gratitude will be deployed into Keyfield's vessel chartering business for its customers to transport materials and equipment between shore and offshore platforms. Group CEO and Executive Director Datuk Darren Key notes that the acquisition is a strategic move to expand the company's fleet and broaden its service offerings. He added that it will make an excellent addition to its fleet, as it can be used to fulfill invitations to bid for platform supply vessel chartering contracts, which the group has been invited to participate in.